Amit Dixit as well joins in on the show right now to talk about this big development with Tata Steel. Amit, hi, morning. Good to have you on the show. Just wanted to understand what is it that you're making of this mega entity which is going to get created, and of course the assets that it's going to have post the amalgamation.
Yeah, hi, good morning. So, first of all, this is not something very new, I would say. Tata Steel has been articulating it quite meaningfully in their annual reports over last 2 to 3 years. In fact, the management in every investor call or whatever interaction they have had with us, they have been highlighting it, simplification of the group structure and basically merging the subsidiaries so that, things can be streamlined. Now, I see three clear advantages at this juncture. The first one is that if you look at after the change in MMDR, there was some element of royalty that Tata Steel Long Products, Tata Metallics had to pay. Now, with the amalgamation coming in with the merger, I don't think that royalty would be required. So, for record, this royalty was to the extent of 392 crores in FY22 for Tata Steel Long Products. So, that is a clear-cut cost advantage that you will get on, as and when this merger happens. So that is point number one. Point number two, I would like to highlight that Tata Steel has been actually on the roadmap to build a very meaningful long portfolio, and the acquisition of NINL and the endeavors around that are a manifestation in that direction. I think with this acquisition, with the Tata Steel Long Products coming in the ambit of Tata Steel, their long products would get one strategic direction. The third and the point that has been ignored by many are the synergies in the procurement. So if you look at raw material, I believe that only coking coal is being procured centrally. The rest all the procurement is done by the individual business unit. With this happening, the procurement cost could come meaningfully down, your logistics cost, the warehousing utilization, and don't forget that the iron ore assets can be balanced throughout the lifespan throughout their lifespan. So I think this clears a lot of, in terms of cost, I think, as I said, the point number one, royalty thing would be direct. But the other things will take time to unfold. But clearly in line with Tata Steel's strategy and a positive development for the stock.
Just wanted to understand what this would mean when it comes to the shareholders of the individual Tata Group subsidiaries, the likes of Tata Steel, Long Products, Metallics, Tin Plate, TRF, etc.
No, so I think they have given the swap ratio, and the swap ratio I think is at least we don't cover subsidiaries directly, but from the market cap and from whatever market and public information we have, I think it appears to be quite fair and in line with the transactions consummated in the past. So I think it's quite fair for the shareholders. I don't see any red flags over there.
Okay, Amit, great to have you on the show. We'll let you go on that note. Of course, the smaller entities are the ones which are perhaps going to see a bigger reaction of this merger announcement that has come in, not entirely unanticipated like Amit as well was just highlighting. But Goldman Sachs has